T bills market is trading on a quiet note due to the 94 billion Treasury bills auction today. Traders at UBA say that they expect a further rate drop into this auction, and I have Chuka Nwachukwu, the head of bonds trading at UBA. He joins me now as we discuss midweek activities in the fixed income and FX markets here in Nigeria. Thank you so much for your time today, Chuka. Let's first start with your expectations there for the Treasury bills auctions and how this compares to previous auctions.
Okay, so like you said, the Treasury bill auction is today, and then we have 94 billion on offer. So from expectation, last auction 1 year came out at 4.35, and then we expect that it will drop further. We expect further drop in yield to about 3.95 levels.
All right, but looking at how the market has played out this week, though, for you, what's driving sentiment, and do you think it's sustainable to hold the markets or even get better?
Well, the sentiment this week has been low yield drive. Market has been, yield has been trending downward due to liquidity in the system. Basically, what is happening is that there's a few investment opportunities in the system, and so everybody is running into safety, and then the most available safety for now is investing in the securities, which is the Treasury bills and bonds, and that's why we have the yield dropping.
All right, but what about the Euro bonds, and how is that performing?
You mean the Nigerian bond?
Yeah, Nigerian Euro bond.
Oh yeah, it's been performing well. I mean, most of the Euro bonds are been performing well, especially with the with what is happening in the between Ukraine and Russian war. So you found that both Nigerian Euro bond, the Ghanaian Euro bond, as well as some other Euro bonds like the sovereign. I mean, sorry, the investment Euro bonds are all performing well. So yeah, I mean, if anyone wants to invest in Euro bond, for now, this is the best time to invest in.
All right, now let's look at the Naira there. Where do you see that play? How do you see things playing out? We're about to round up the first quarter, though, but how would you rate the performance of the Naira in the first quarter of the year?
Well, Naira has been performing pretty well. We've seen the rate has hovered between 416 to 416.7, 416.75. This also has to do with the rise in oil price, and then this has also impacted positively on our reserve.
But how do you see activities in the investors and exporters window play out?
It's been playing out well. I believe that the demand on that window has been met. Like I said earlier, it's been trading between 416 to 416.5, 416.65. So basically, on a long run, it's looking good. But again, you know, this is a pre-election year. We have the issue of capital flight, which obviously will bring in a lot of demand into the system. And but you know, for us as a country, with the high rate in the oil bench, I mean high oil rates, it's looking good for us, especially on the side of the reserve.
Yeah, because I was going to get to the reserves and how you see if you think this is going to be sustainable.
Well, for now, I mean, as long as the oil price is high, you know, it will be sustainable to within the immediate future. But then, going towards the end of the year, and then of course the election, we might see a lot of this demand coming, and that will put pressure on the reserve.
Yeah, because I'm just looking at the inflation numbers from Ghana now, quite a huge jump there when you look at how things play out. But looking at Nigeria's February inflations, I'm trying to understand how what your expectations are for inflation and how the market is pricing that in.
Well, with the oil price now, the flip side of the oil price hike is that on our own end here, you know, we see the rise in petroleum price. Some of these prices are selling between 200 to 300, and that obviously will impact on the inflation figure. So I see the next inflation figure coming out slightly higher than what it is now.
Okay, but looking at the external developments, yes, earlier you alluded to the rising oil prices. We're still seeing the tensions in the geopolitical tensions continue to sway markets there. I'd like you to speak to what we're expecting in terms of the earlier planned rate hikes from some of the global banks like the U.S. Fed.
Yeah, you know, some of these advanced countries and advanced economy already have what they call further guidance. And so they'll tell you that in the next 1 year or 18 months, we are going to hike rate. However, with what has happened now in Russia, you find out that just yesterday night, the U.S. announced that they're going to stop buying both gas and oil from Russia. You know, that will put pressure on the inflation of those countries. In UK, for example, oil is presently selling about £2. In US is going for about $4. And so all these things we add inflation, we add to the inflation figure, and that will probably affect their further guidance in terms of hiking rate.
Yeah, because when you look at monetary policy players here in Nigeria, yes, we have that crucial second MPC meeting coming up now. And as looking at the recent developments, both externally and internally, and how would you think that we should position monetary policy to adjust?
Well, it will affect us, but not immediate, because the immediate impact on the advanced country is because they buy directly from Russia. For example, Russia supplies about 25% of oil used in Europe, and this is not the case for us. So we might see the effects, you know, towards the end of the year, or perhaps maybe first week of next, first quarter of next year. So I do not think that the monetary policy decision will be based on that, or it will affect the decision that much.
All right, thank you for your time today. I've been speaking to Chuka Nwachukwu, Head of Bonds Trading at UBA.